Hello everyone, my name is Charlotte and I'll be your host for today. Welcome and thank you for taking part in MDPI's webinar entitled The Future of Economics and Finance. This is the first webinar in this JRFM series based on special issues from our journal of the same name. If you are interested in contributing to this topic, you can submit to any of the special issues that are linked to this webinar. Simply check the webinar's webpage for more information. I would like to remind everyone that this webinar is being recorded and the recording will be made available as soon as possible on the webinar's webpage. Today's session is also being live streamed on MDPI's YouTube channel, so hello to those of you watching us on there. Certificates of attendance are available upon request. To get yours, please send an email to jrfm.webinar@mdpi.com. Certificates will be delivered to those who have registered and watching on Zoom, not on YouTube. Thank you for your understanding. There will be 3 presentations today of 35 minutes each. Each presentation is followed by a question time. So if you have any questions for our speakers, please post them in the Q&A box at the bottom of the screen. Please remember to mention the name of the person to whom you're addressing your question. Today's webinar was supposed to be chaired by Professor McAleer. Unfortunately, he is unwell and unable to participate in this webinar. We wish you a full recovery, Michael, and hope you'll soon be back on your feet. Michael has asked me to say a few words in his place. First of all, he wishes to express his gratitude and thanks to Kia and all the excellent team at JRFM for their outstanding work, to the guest editors, contributors and reviewers of the special issues, as well as reviewers of standard issues. He'd also like to thank our 3 guest speakers of today's webinar. Michael sees the future of JRFM going in multiple directions, 3 of them being macro and microeconomic risk, finance, alternative energy sources, energy economics, energy finance, medical risks, including medical and healthcare insurance premium, as well as the effects of the COVID-19 pandemic on all the issues raised. Again, if you're interested in contributing, please don't hesitate to submit your research to JRFM. And now let's start this Future of Economics and Finance webinar with our first speaker, Professor Dr. Shawkat Hammoudeh from Drexel University in Philadelphia, USA. Professor Hammoudeh is an expert in gas and oil pricing and its effects on the economy. He has served as the senior economist to the Organization of Arab Petroleum Exporting Countries and as a researcher for the Kuwait Institute for Scientific Research. He has earned grants to study world oil prices and is a co-author of journal articles on the price of gas and oil and its connection to the US markets. Shawkat, the floor is yours.
Thank you very much. I want to welcome all the participants. I'm glad to be here with you from Philadelphia. And my topic is, you could call it ideas or thoughts or ideas for future research in energy economics. So the future in here in my presentation is about energy economics. And in this presentation, I look at the market, look at the trends in the market, look at government actions, the private sector actions, and try to put all those together and come up with some kind of ideas for future research. So, okay, my first idea in here is about natural gas. And we know that natural gas exists as natural gas reserves standing on their own, or they could be associated gas reserves on top of oil. In the previous years, when they discovered oil, natural gas started coming up. And so the companies vented the natural gas. And it went into the skies and into the atmosphere and polluted the atmosphere. Then they decided to flare it, to burn it. And that also contributed to pollution. So later, most of the natural gas that is discovered in the United States is fracked natural gas, most of it now. And they still flare the natural gas. Gas flaring produces about 1% of the global carbon emissions, 1% of carbon emission at the global level. Now, some people thought that instead of flaring, burning this natural gas and pollute the environment, we could use this natural gas in mining Bitcoin. Farming Bitcoin, because you need electricity to farm Bitcoin data centers. And that electricity fueling of Bitcoin comes to about the electricity needs of Switzerland. That amount is used in mining or farming Bitcoins. So some people thought, well, why can't, because this is a cheap, could be a cheap source of energy, why couldn't we use it in mining Bitcoin? And it doesn't have to be very expensive because it's flared. So the idea came is, how can we use this flared natural gas in mining Bitcoin? And this is a new idea, and people think of it as an idea that may take a decade, many years to come. It's not available right away, but it's something that is possible to do. But the problem in here is to use this flared natural gas to mine Bitcoin is not going to be easy, because Bitcoin is very volatile. Bitcoin is very volatile, and that will have implications for the pricing of a flared natural gas. You're gonna need some kind of steady behavior of Bitcoin to come up with a pricing system for the flared natural gas. Can the producers of Bitcoin have a commitment in using the flared natural gas when Bitcoin prices could go up as high as the skies and it go down as low as the earth? So that's something should be studied before any Bitcoin producers make any commitment to using flared natural gas in mining Bitcoin. That's the first idea. My second slide, or my second idea, is about the clean energy triangle. This triangle includes technology, finance, and policy. We need three elements to deal effectively with global warming. We need technology, we need finance, and we need policy. Technology is available and relevant. I could remind you of the technology that produces wind energy. This technology has become viable. The cost of producing electricity from wind energy has dropped by 70% since 2009. And the cost of producing electricity from solar energy has dropped by 89% since 2009. So this technology is available and has been used. Now you need the second angle of the triangle, which is finance. Well, finance is following because those projects, the solar projects, the wind projects are capital intensive. And the companies that produce electricity from those sources have been finding finance to support their investment or their projects. So when investors look at these projects, they have three criteria whether to invest in the project or not. Those three criteria are the environmental, the social, and the governance. This is abbreviated as ESG. So those are used to judge, to evaluate whether you're going to finance the project or not. Now, for the environmental, they want the companies to be a steward of nature, to take care of the environment. That's for environmental. Those are the investors' criteria. The social, they look at the social aspect of companies. They look at their relationship with their employees. They look at their relationship with their suppliers. They look at their relationship with the community they operate in. And they evaluate projects based or companies based on this social criterion. The governance, they also look at the company's leadership. They look at executive pay. What is the difference between the highest pay and the lowest pay? That's also part of governance. Now, for the last angle, which is policy, you need political decisions to support these goals of fighting climate change. You need governments to chip in and support the projects. The government support or the political decisions have been slow, have not been progressing as is required. And you know what happened during the last 4 years when former President Trump became the President of the United States. He withdrew from the Paris 2005 Paris Agreement. And the United States is the largest polluter in the world. And that kind of people look at it as not a serious agreement. And it delayed things. Now, when you talk about government policies, okay, governments, especially the major governments, should do their share, but to deal with the climate change alone is not possible because this is a global phenomenon. Climate change is a global phenomenon. You need a unified global policy to move forward with the projects. So all those elements should be integrated to help us to transition towards a green economy. Now here about this slide is about sustainability, government business sustainability, and the transition to a low carbon economy. After that will be the second slide, but we're not going there yet. It's going to be about the consumer sustainability or looking at sustainability from the consumer point of view. So for governments and sustainability, the government should initiate various measures in order to sustain business sustainability. So the government should take part in doing business sustainability. When the government starts doing their share or their shares, the government should concentrate on the project that can be implemented promptly. You shouldn't take a long time to implement the projects because we're fighting pollution and pollution is affecting the environment, affecting people, vegetation, everything on this earth. So they should not take a long time in initiating projects. The government should also, when it comes to sustainability, the government should also avoid complex projects, untested technologies. They should just, we see that technology is available, is viable, and the government can take part in that technology. When government looks at sustainability, it should also accompany that with other programs, like they should support, for example, alternative sources of energy. They should support solar energy, wind energy, not just looking at sustainability without doing other programs. They may also, governments may also, as the United States is doing now, governments may convene conferences on sustainability. Like you see the conference that Biden has convened, and he brought together several leaders from around the world. He brought the leaders of Japan, Germany, Britain, and other countries. They all discussed climate change. Now we have on Bloomberg TV, they have a quote for Biden. It comes once in a while, every day, about what he said that we can do and we will do climate change. That's how government get committed. The United States plan to reduce pollution emission by between 50 to 52% by, 2030, I think. And China has made a commitment, but China's commitment is far. It's going to be by year 2060. Biden seemed to be more interested in the environment than when he was vice president under the Obama administration, because Obama committed to reduce pollution relative to 2015 by 25 to 28%. That's Obama's commitment. But Biden now, he's saying he wants to reduce emissions or CO2 carbon emissions between 50 to 52%, which is more ambitious than the policy under Obama. Well, when Trump came, things got delayed, and he didn't believe in the climate change, and he just wants to make more money now and ignore the future. Okay, I think we could go maybe to the last slide. Yeah, okay, this is about the consumer and sustainability. There has been a survey that shows a big gap between what consumers think they know about sustainability and what they actually know, what they think they know and what they actually know. So that means the consumer is not well aware of sustainability. So we need more sustainability related information to be available to consumers to strengthen the sustainability agenda. Otherwise, if the consumer is not on the same page, sustainability will suffer. Now, we need organizations, whether companies or governments, institutions, to play a part in making this information available to the consumers. And then the last part of the thing is cut off in here. I cannot see it. So sustainability requires many parts of the society to participate in it. Business should participate, government should participate, the consumer should be made more aware of sustainability, the agenda for sustainability, the brands of sustainability, and that also requires some active support from organizations that have to do with the environment. I think it's the last slide.
Yeah, that was the last slide.
That brings me to the end of my presentation. I think, as I mentioned before, also, I have to give an exam in about an hour. So I just have a limited amount of time right now. Thank you.
Thank you. I think we just have one question here from Asha, who asked how to save such a heavy electricity consumption in mining process.
That is still, and we said that Bitcoin consumes electricity as much as Switzerland does, and that the question is that open for future research. That's a research project, how to do that, and have to agree on several issues, including pricing. I think pricing is the main issue. How to use that, I don't know how they use electricity, but you could generate electricity, or no, you could use natural gas itself to power those centers for Bitcoin. How to do that, that is beyond my knowledge. That's a technical question.
Okay, and Asha has also asked another question, which is how to balance between sustainability and low carbon credit, as both are opposite to each other. How to make the growth of economy.
For sustainability credit, I think investors, as I said in the second slide, investors evaluate companies before they provide credit, and they use those three criteria to evaluate companies, and then the consumer will decide to invest like in bonds of these companies. And then the role of governments, that government should provide also subsidies to these projects.
Okay, thank you. So Deba asks, do you think the ongoing pandemic will quicken action from governments on climate change front?
Yes, I think there is research now that being published about the impact of COVID-19 on alternative energy sources. And this pandemic affected everything, affected the economy, affected people, and people are consuming less energy because they stay at home, they don't drive as much. But this pandemic, I think, is temporary. It's not going to last for a long time. It delays things, but sooner or later, this pandemic will be put under control. And here in the United States, now 70% of seniors have been vaccinated, and people move. And in terms of schools here, the schools came back in full capacity. And now they're going to open restaurants in full capacity. They will open halls for weddings, for gathering. So it has been a delay, but there has been the stimulus package that also compensated for this delay. And now people have more money because they receive this money from the government as part of the stimulus package. And that helps people try to, for example, now there is a boom in improving people's houses. Most people now are fixing their houses, and people move, they go to restaurants, but they will do more starting May 7th. And then things will go back to normal. There has been a delay. There has been a delay by Donald Trump for 4 years. There has been a delay by the pandemic for more than a year. But we're looking at the long run, not looking at something for a year or two.
Okay, thank you. I see that Asha thanks you as well for answering
Thank
the
you.
questions. If there aren't any other questions, doesn't seem like it. So I thank you, Professor Hammoudeh, for your interesting presentation. We'll let you get off to go and teach your class now.
Soon I will get off. Thank you very much, but I will stay for a few more minutes.
Okay, no problem. So now we can move on to our second speaker, who is Professor Dr. Thanasis Stengos, I hope I pronounced your name right, from the University of Guelph in Canada. Professor Stengos joined the Department of Economics in 1984, where he was University Researcher Chair from 2004 to 2019. He received his bachelor's and master's in economics from the London School of Economics and his PhD from Queen's University. His main teaching area is econometrics. His research interests are in non-parametric methods and empirical growth. He has published in many other areas in economics, including labor, empirical finance, applied demand analysis, and history, obviously economic history. And so now I hand the mic over to Tanis.
Thank you very much. I'm glad to be here and participate. My talk is going to be a bit different than the usual talk about a particular topic. It's more on challenges in publishing and what COVID-19 has brought upon us in terms of issues that were around and facing researchers before, but have essentially been accentuated by the pandemic in more than one ways that we can think of. Okay, so COVID has introduced many challenges and realities in journal publications. One of the challenges was because of its nature, it created somehow an urgency for research to be published very, very quickly. In other words, it was somehow imperative. Let me go back. Okay, it was imperative that a lot of the published outcomes of research would not wait in the refereeing process and be published so that, first of all, the information would be disseminated quickly, as well as the public would become aware of the various issues that were involved in the pandemic itself, in terms of health, to start with. Usually, when you submit research to publication, there is a process that takes time to. The process has accelerated because of the impetus to publish quickly and publish quickly relative research that has immediate repercussions for the pandemic. And so what happened is the refereeing process was somehow obviated in many ways, and papers were uploaded to open access preprint servers without undergoing the normal peer review process. And the pandemic essentially brought forward this trade-off between quick publication and thorough refereeing process. Now, it was natural that this happened because not only the public, but also the research community wanted to find out and get quick results regarding the various research projects that were undertaken for the pandemic. For example, we know that what happened is that we have vaccines in a record time, and the vaccines in record time did not happen overnight, but we're using the platforms for vaccine generation that was essentially in place before, but for other viruses, not of course for COVID. And the approach was to see, first of all, what the effects of COVID were, and secondly, how to proceed with coping with that. However, because of this changing of the circumstances, very many papers that were and research items that were published and were published without proper refereeing were basically many times full of mistakes that had serious consequences. For example, there is this publication, Retraction Watch, that has been tracking notices of retractions and expressions of concern regarding COVID-19 related research. And if you go there, you find a lot of cases of mistaken research that was unvetted and basically produced without much refereeing, without much reviewing. Serge Horbach, a postdoctoral researcher in the Netherlands, doing research on this topic, found that medical journals have the time publication. In other words, medical journals that would normally take the usual 6 to 8 weeks for first, which is very short in general, but would take 6 to 8 weeks for first response, now would take pretty much 1 or 2 weeks before they would accept research articles in that in the topic. That, of course, created a lot of, a process of putting forward quick information dissemination processes, but also raises concerns for the quality of the peer review process. In other words, we know, for instance, there was a celebrated paper from the Stanford Medical School that was published around now, last year, around, towards the middle of May, that was claiming that a lot of the data regarding COVID essentially was it was pointing towards already achieving herd immunity, and we should not really be paying attention so much towards issues of concern regarding social distancing and taking precautions. Of course, the paper then was retracted mainly because a lot of the data that it was based on and the analysis, the statistical analysis that was done upon was flawed. And in fact, a lot of the conclusions were not supported by the data as presented in that paper. Now, so what we have is the extreme publishing model under the pressure of a quick publication is when scientists upload their work without any peer review in these preprint servers and making claims that may or may not be true, okay? Now, of course, in social sciences and economics in particular, the same trade-off between rapid publication and rapid and thorough review exists and always existed. And somehow the big complaint that researchers have with a lot of journals is that how long does it take for my paper. It takes about half a year to hear for the first time if you are lucky, and then you send the revision back and you hear another. It takes another year before you hear, and it takes from first submission to final appearance of the paper may take 2-3 years before that happens. Now, of course, in health sciences, the stakes are higher, and somehow the speeding process is much more immediate and much more important. So what I was suggesting here is that COVID economics, for example, which is something in between the process where it's a two-stage process where there is vetting by the editors for quality papers with an up and down. The up and down, then if it is up, it is uploaded in a platform there. And then there is a number of journals that have agreed, once a paper has been uploaded there, to be seriously considered by the top. There's a group of 20 top journals, including, in fact, the American Journal, the American Economic Review, the Review of Economic Studies, Econometrica, and many other big journals, to consider these papers seriously once they have been uploaded in that platform. In other words, the process here allows for the lack of the desk rejection that you usually have if you send a paper in the top journals. I mean, very, very frequently, you send the paper and 2 hours later you hear, sorry, the paper does not fit our journal in terms of content, in terms of quality or whatever. Okay, so so in other words, what I suggest here, the trade-off between speed and thorough review has always been, and we need to balance the two opposing forces. In terms of our journal here, keeping the special issues is an important venue. Gives focus, and they add topic relevance, and they are important because people who are interested in on the subject essentially participate. And we need to also add incentives to contributors with a partial or full publication fee waivers to attract the best possible researchers, okay? To attract people who otherwise would be not willing to commit or send their best papers or their papers to our journal. Give incentives to reviewers based not only on speed, on how long they take to review a paper, but the quality of the review as well. In other words, asking somebody to review a paper in 2 weeks, which sometimes you hear that, is not something that we should desire unless the quality of the review is there. And if that happens, then the reviewer should essentially get some reward for doing that in terms of publication, in terms of being allowed to essentially participate more fully in the publication in our journal. So this also perhaps we might allow for submission of shorter papers with an up or down decision, but that of course would be the work of the editor to do that, and that would be quite a lot of work many times for the editors to decide by reading and deciding whether the paper would be admissible as yes or no. In fact, a lot of the earlier Economics Letters, for example, in its initial um, incarnation, was an up and down paper, journal. So you never got comments. It was either yes or no. Now, of course, it's a much more standard type of journal where you get comments, you get revised options, etc. So, in other words, what I would like to, suggest is that COVID has brought forward certain tensions that exist in the publication, in research and publication process, which can allow us to take advantage of them. In other words, there's always a tension between the speed and the thoroughness. And we can essentially try to address that by by giving incentives to researchers to do that in a way that incentivizes both reviewers and researchers who essentially submit their publications there as well. So the incentive of somebody to submit their paper is to get a thorough and quality review, as well as participate in a special issue. And if the paper is, if the researcher has been asked to participate, to also forfeit or waive the publication fee in that case. So this is essentially my talk about, what COVID has brought upon us in terms of opportunities as well as problems that have been around always, but in terms of speed of how these problems have been accelerated and accentuated, COVID has really played a big role in that. That's about it. That's the talk. Sorry about.
Thank you very much.
So that's
managed to get the end, so that was good. There is a few questions here I can see. If you
okay.
To answer them, let's hope your internet remains stable for this time. Deborah has asked, a fallout of the current pandemic is how the public policies are changing. In central banks, a green revolution is underway with environments making inroads into central banks' mandate. How would you envisage the impact on the ground going forward?
This is something that has to do with how the economy responds to, first of all, the interventions by governments. Everything is very uncertain still. There is the trade-off, as I said here, there's a trade-off between speed and thoroughness. There is the same trade-off in how you open up the economy between speed and thoroughness. Thoroughness comes through vaccination. Speed comes through governments trying to open up too early and creating through the variants issues that essentially accelerate and somehow take away some of the benefits of vaccination. So trade-offs are everywhere around us. And at this point, I think unless governments and the stakeholders in an economy manage to find a balance between this trade-off of a quick opening of an economy and the thoroughness that is, and the speed, the uncertainty will still exist, and I cannot make predictions about things. I mean, I could not really do that because any prediction at this point would be met with a 50-50 chance of being met. Okay?
Okay. Thank you. We also had a comment from Asha who said, sometimes we didn't get an opportunity to get the paper published in a good journal in spite of good quality. I think this chance should be given to new research also. Okay, well, thank you, Thanasis, for your presentation. We got bits of it, but I think we got the most important part.
Okay, bits of it there. So if anybody wants it, that's around. That's it. Okay. Thank you, and sorry about that. This is technology, unstable. It is, you know.
Everything happens nowadays. We have to be ready for it.
Yeah, that's. I know. Okay.
Thank you very much anyway for your presentation. And we're moving on now to our third and final speaker. I'll reintroduce her. So Professor Siri Terjesen is from Florida Atlantic University, and she is Associate Dean of Research and External Relations and the Phil Smith Professor of Entrepreneurship at the Florida Atlantic University in Boca Raton. And she is also professor at the Norwegian School of Economics in Bergen, Norway. She joined FAU in August 2019 from American University in Washington, D.C., where she served as professor and director of the American University Center for Innovation and was co-PI of the NSF I-Corp site grant to commercialize tech-based entrepreneurship. Siri, please, the floor is yours.
Thank you so much, Charlotte, for organizing. It's been a pleasure to listen in on the other presentations. Today, I was going to talk to you about the title of this seminar. You can see that there, The Future of Economics and Finance. And I wanted to cover a couple of pieces. First of all, some of you have seen there was a recent piece summarizing some of our best contributions this last year. And then talking of all of those were published in 2019. So talking about that research in the context of the economy that we now live in. Then I wanted to talk about an exciting new book that I've been reading, Value Creation Principles, and the real prospects for great research there. And then I have two recent literature reviews and research agendas on topics that may be of interest to some of our viewers, blockchain, Bitcoin and ICOs, and also the corporate governance in entrepreneurial firms. And I just wanted to spotlight some of the future research directions there. And I welcome your Q&A throughout. As Charlotte mentioned, I am here in sunny Boca Raton, Florida on campus. We are back. So let's get started. This is just a summary that appeared in your journal recently on some of the best papers that we published. And as you know, the Journal of Risk and Financial Management covers a gamut of economics, finance, and entrepreneurial issues. And we spotlighted a few papers and talked about the shifts in research where we could take some of the findings from this research and look at it in a COVID-19 era. And of course, keeping in mind some of the points that Professor Stengos made about the interesting environment in which we publish COVID-19 research. One observation I would make there very quickly is that it has become harder. I'm an editor of 5 journals, and it has become a lot harder to get good reviewers for papers, and the timeline is a little bit longer than usual, at least in the business and economics journals. But anyway, a couple of neat research topics here. As you can see, this paper, one of our papers spotlighted the cross-country venture capital literature, and typically that involved venture capitalists traveling typically to visit investments and consider and do the due diligence in other countries. And there's some real need for research around how this pandemic has reshaped the VC investment criteria and priorities, and especially considering national government policies. And we could also consider what sort of transaction and ecosystems policies were able to effectively stimulate the investment. A couple other questions that I highlighted in this paper, I hate to read them off, but generally we need to know a little bit more about how entrepreneurs were able to or able not to secure the necessary capital to start and grow their firms, whether that was financial, social, or human capital, and what specific activities they could undertake. And we could imagine that these studies would really need to be designed on an industry level. Here in South Florida, we have a lot of tourism, we have major cruise lines, and those industries have been certainly harder affected than other industries. Then there are the pieces that Professor Hammoudeh brought up earlier about governments pushing for economic, social, and environmental goals in this pandemic. And this is both for developed countries, but also the developing, transitioning, and emerging economies. I would tend to take we can have a little debate later, but I would tend to take a laissez-faire approach to governments, in that governments should not have too much of a role in telling businesses what to do. And so this can be a kind of an interesting piece. In fact, one of the major pieces that I've been fascinated with, and I think deserves a lot of research, is on how the COVID-19 era infections, restrictions on personal freedom, et cetera, have affected entrepreneurs, not only their businesses, but also personally and professionally. So the financial losses, but also just the mental health issues and the increased insomnia and stress. And especially here, and there's been some interesting work coming out even from Egypt recently on what sort of stress relieving, for example, positive psychology measures can we take to help entrepreneurs to proactively measure and maintain their well-being, both economic and, again, personal. One of the papers looked at cornerstone investors. Those are kind of the first investors in firms that go to IPO. They're very, very, very important. And we can think about how their activities may have been affected in this COVID-19 era. And as we've all been watching the stock markets, the US looks a little bit back up again with Google yesterday, but certainly how have the different stock markets around the world responded to the COVID-19 pandemic? Do we see evidence of market efficiencies or inefficiencies, investor rationality and irrationality? And then finally, and I really want to focus on this because I happen to live, and I'm very fortunate to live in the free state of Florida, where we have very few lockdowns. Our university is open. I teach in-person classes here. But we have seen how government shutdowns have paralyzed and destroyed whole business sectors. And there's a need to really examine how those sectors have been devastated and what types of policies we need to foster economic development again, if in fact we need governments to get involved in business, to what extent should they get involved? Another inspiration for future research is this terrific book by Bart Madden. Bart Madden worked at Credit Suisse Holt and was a very successful financial investor. And he's written this book, very much summarizing, and actually has a second book too on human behavior, but very much summarizing what he found worked in the markets. And he has this vision of value creation that starts with a vision for firms surviving and prospering, developing win-win partnerships, and then ensuring the success of future generations. And his argument is one that I buy too, which is that we will certainly see the benefits to society, such as the ESG that Professor Hammoudeh brought up earlier. But what we need to focus on is shareholder return, such that if these companies can't survive and thrive in the coming months or years, then they would not be able to deliver on the ESG goals. And so, as summarized here below, Bartley Madden's vision of value creation principles is that this pragmatic theory of the firm begins with purpose and ends with sustainable capitalism. And he's got a really nice chart of this model. And really at the heart of the model, as you can see at the top, is something we certainly have examined in extensive entrepreneurship, economics, and finance research, but I think is worth revisiting, which is that the foundation of the firm and of sustainable capitalism and economic value is the knowledge building proficiency inside the firm, inside employees. It's training them, it's maintaining them. That's through, of course, job satisfaction and other principles, who can then bring innovations to the market, like new products, processes, and strategies, allocate resources, certainly manage to firm risk. And we see lots of evidence of firm risk, both from internal sources, but also from external sources. And then to take that life cycle perspective and look at shareholder returns. Let me just spotlight a couple of papers. This was one that I co-authored with Romy who is in New York, and Chen, who's in Canada. And we did this, as you can see by the publication date in 2019, before the latest Bitcoin bounce. But we were very, very interested in amalgamating all the research on blockchain, Bitcoin, and ICOs. By ICOs, we mean initial coin offerings, and thinking about what should the future of research be in this sector. So this paper is published in Small Business Economics, and I just include a table over here on the right-hand side to spotlight the important research. I think when we're working in all of these areas, we have to keep in mind that these are very interdisciplinary areas. So for example, when Professor talked earlier about the COVID-19 research that is published in health journals, medical journals, health administration. Well, the same for blockchain, Bitcoin, and ICOs. We see this in computer science journals that talk about the underlying algorithms and the privacy and security issues. We see this in our economics journals. We see this in entrepreneurship journals, and we see them a lot in law and governance journals. And it's important to look across all these fields and think about future research. Just a few points that we mentioned in this article that you can see on the far right is to think about what are the new business models and opportunities that emerge from these blockchain security issues. Certainly one that we've seen here is even folks moving off Coinbase or another exchange and keeping their Bitcoin on a blockchain itself rather than inside a wallet. We can certainly think about other efforts that individuals can take to make sure that they're secure and private. In terms of economics, we really need to think about how organizations leverage transaction costs. Certainly brought up the point earlier about the expense in mining Bitcoin, but certainly there are other transaction costs involved, including the sheer time, et cetera. So I think that could be a really good topic to look at. And we certainly have different models of coins that have different business models, various transaction costs. We can think about whether these will lead to societal good. And we, of course, we can define what is societal good. And we'll think about the economies of scale and game theoretic outcomes. And then for entrepreneurship, there are so many policy implications here for startups. There are so many ICO launches. We look at this Dogecoin, which is, I think, a bit of a joke coin, but has taken off astronomically, a little like tulips in Holland. But certainly we can think about investor expectations and these different ICO versus traditional financing. We can think about the underpricing, and we can think about how even social enterprises could utilize blockchain applications. We're seeing that already now in the sports industries and the tokens that are coming out. We hosted a talk on blockchain here at Floria Atlantic University last week, and we even had an NFL player in attendance who is very interested in the blockchain for his own compensation as well as his investments. And then finally, on law and governance, we can really think about the very uncertain governance. We've certainly had different rules about cryptocurrencies in different countries. And the rules that we have today are not necessarily the rules we have tomorrow. So thinking about how firms and innovation will be affected by those, and the actions that firms might take to impact future legislation. I am no fan of crony capitalism, but we can certainly observe that there are instances of lobbying by firms. And let's go finally to my last set of slides and research directions is about corporate governance and entrepreneurial firms. So there's a huge literature on corporate governance in what we call traditional organizations, publicly traded companies, but there isn't so much research on entrepreneurial firms, but we know they have boards. We also know that they have advisors. And what I did with my co-authors, Hazen is in China, Timmers is in Sweden, is we looked at all of the research on entrepreneurial firm corporate governance and tried to summarize it. And then we tried to suggest some paths forward. There aren't that many papers. So we found, as you can see here, 137 research papers from pre-1990 until June of 2018. So that's almost 3 years ago. And they're published in 60 different journals, again, across lots of gamuts here. We've got law, economics, finance, et cetera. So there are so many opportunities here on all fronts. Certainly looking at the research settings of different firms and different governance structures, looking at the many theories. We can start with agency and resource dependence theory that were so traditional in corporate governance of firms, but then we can turn to other theories such as governance deviance and team production theory. We can think about just all this research on board composition and the new rules that are coming out. And finally, we can take advantage of lots and lots of new statistical techniques and data sets to evaluate that. So thank you so much for listening. I'm happy to take some questions.
Thank you so much, Siri. So we have a couple of questions here. So one from Albert, who asks, are there reputable industry-specific, for example, practicing Hessian entrepreneurs survey databases focusing on survival and coping mechanisms during COVID-19?
That's a great question. I am not yet aware of any publicly available databases. I think that various entities around our country and around the world have been collecting data. I've seen good work coming out of our colleagues at Babson, especially focused on women entrepreneurs. And then I believe the folks at Kauffman Foundation have also prioritized this. And certainly on an individual basis, many scholars have been compiling this data. Remember that even if you didn't get it in time, it may be possible to look back in time and be able to capture specific actions, resources, et cetera, over time.
Okay. And then Mossab says, thank you for your insight. And then he asks, do you think that COVID-19 affects the corporate governance practices in the organization?
I think that's a great question, right? And if we define corporate governance quite broadly, absolutely. I think we could look at this from lots of angles. Certainly one angle that I'm presently fascinated by is how we get work done and the culture of the organization and the efficiencies. So as we talk about return to work and return to a more normal life, that certainly has implications. Typically directors are phenomenal stewards of the organizations that they oversee. But if they had very, very, very pressing issues to deal with in their own organizations and couldn't devote the necessary time to their directorship roles, then we certainly have corporate governance issues that would be fascinating. And then I think what we have seen in this pandemic is so many governments throwing so much else into these relief packages, at least in the United States, that there become all these new regulations and requirements. So in the US, in the COVID-19 relief schemes that have been approved by Congress and the Senate, have been a host of Green New Deal issues that frankly had nothing to do with COVID-19, but were lumped in there for political purposes. So we really need to look at how the pandemic created a situation in which others could push down policies.
Okay, interesting. Thank you. I'm trying to see if there are any other questions, but I don't see any more. There's just one that's appeared. Perfect. So Mohammed asked, do you think researchers should revisit sectoral level study more during post-pandemic period? Hopefully we will get back to some level of normality soon, as some sectors are reacting very differently than other sectors during pandemic.
I think so. I mean, that's a great question, Mohammed. And those sectoral level studies really characterized a lot of the early management, economics, and finance research. And then, we went to large studies and controlled for 2 or 3 digit industry code sectors. But we know when you drive to work and pass retail shops, that even not all retail is the same. So I think there really is a difference. And then you could even look at the organizations within them. So for example, here in the US, some stores could stay open and some stores had to close. And it depended on the entire body of goods that were sold, right? So that makes it a quite fascinating issue. And so I hope that we'll return to sectoral level studies. And I think a real focus would be the sectors that are most important to your region and your nation. And hopefully that the insights from your research would inform the practitioner and potentially the policy actions. So I hope that you can focus on those. And I think we would definitely welcome those on JRFM. If I look at big studies across all industries, as an editor, I would be a little bit more skeptical that we might be overgeneralizing or not picking up some important phenomena in the data.
Okay, thank you. And then another question has come in from Kazem, who says there are many unresolved issues, puzzles, and anomalies in standard economic theory. For example, those arising in behavioral economics. A recent article published in JRFM on the 2nd of April by Falahati presents a new paradigm which resolves many of these puzzles. Shouldn't the resolution of existing puzzles take priority in research articles published?
That's a great question, right? I think that I also love a good replication study, and this COVID-19 era could certainly show us that the findings from data that we looked at that were 2 years ago might be entirely different in this pandemic, right? The predictors of success in the cruise industry are completely out the window. So I think that there is room for replications. I think there's room for looking at paradigms. I think there is a lot of room for talking to managers on the ground and leaders about the very real issues that they face in the pandemic and scoping our research around them. So I hate the ivory tower metaphor, but I would say that, right? Just connecting with managers, thinking about the issues that they're thinking about and proactively researching and hopefully solving them.
I'm just looking at the chat, and there's Artelia who wants to thank the speakers and says that the current challenges globally are multiple, and such events determine us who work in the academic field to come up with studies and research to answer these challenges. Congratulations and good luck. There seems to be no more questions in the question and answers, so I think I gave a few seconds. So I think it's safe to say that people have asked all the questions they had. It's now time to close this webinar. I want to thank all the speakers. So unfortunately, I think we lost Thanasis because of his internet connection, and Professor Hammoudeh had to go off to give class. So I thank them both, and I thank Siri, who stayed till the end. Thank you for taking time to answer in the questions. And again, get well to the chair, Michael McAleer. Hope he gets better soon. And thank you to the attendees for joining.
Thank you, Charlotte, so much for organizing. We appreciate how well run your organization, MDPI, is. So
thank you very much. So I say goodbye, everyone. Hope you have a good day, morning, afternoon, wherever you are in the world. And yeah, the recording will be available soon. So if you missed it, don't miss parts. Don't hesitate to watch it again. Bye-bye, everyone.
Thank you. Take care. Bye.